Hi, welcome back to the show. This is Joe Rabil with Rabil Stock Research. So the bulk of the show is going through the stock requests that are sent through during the course of the week. Plus, I do a few on my own. And also at the beginning of the analysis, I try and pick out an indice or two that I think are important to discuss for the week. But I like to start out this show with a lesson. This week, I want to discuss the heavyweight report that I send out once a month to my subscribers. And the importance of that. So let's get into the agenda for today. I want to talk about the heavyweights. The heavyweights are the top 30 stocks based on market cap in the major indices. And these stocks have a huge influence of what's taking place. So I want to show you the table that I send out that shows the short to intermediate term and long-term trends for each of those stocks. But I also want to talk about why it's important to be consistent with it and how these changes can affect your thinking about the overall market environment. And then we're going to just look at what they're saying right now. And then when that's done, we're going to go through the individual stock requests that came through. Let's go ahead and look at these heavyweights now. Okay, so I want to start out with the review from December, which was sent out about the middle of December. Look at the trends. So I've got the short-term trend based on the daily chart, intermediate term trend based on the weekly, and then the long-term trends based on the monthly. And you can see the long-term trends overwhelmingly bullish back in December, basically an across-the-board positive. Now, we can see there were a few red marks in the intermediate term, but for the most part, on balance, we had a bullish bias based on the intermediate term as well. Now, there are some neutrals. If there's not a mark in either of these columns, then we're neutral in that time frame. And for intermediate term, yeah, we had a few of those starting to develop when Amazon was starting to run into some issues. We started to see that flatten out, maybe a little bit quicker than some of the others. And then on a short-term basis, we're going to see these red marks pretty regularly when the market goes through any kind of pullback or correction. But the key things to take away from this, in my opinion, is we've got a situation where on this report, we're looking at the sectors represented in the top 30, okay? Because if the market is going to have a big move, it's probably going to come from these names, these 30 stocks. These 30 stocks have such a big influence on, say, just as an example, like the S&P index. It's hard for that index to go up or go down if these are going in the opposite direction. So if we get a down move in Apple and Microsoft and Google, Amazon and Tesla, it's going to have a pretty big influence on the overall market because they make up a pretty good portion. So I think this is a really good way of keeping track on a stock-by-stock basis how the overall market looks. Now, if you think about it, we've got this is December. And so what I want to do is I'm going to minimize this, and now we're going to look at this is currently where we sit. Now, we still have the long-term trends still overwhelmingly positive, although there's a lot more in the neutral camp, and we do have one on the negative side. But the big change comes on the intermediate term, and this is the weekly chart. The weekly trend has shifted down in many of these stocks, and you can see the top 5 stocks, because these are sorted by their market weight. Apple, Microsoft, Google, Amazon, Tesla have all flipped their intermediate term trend to negative. And I think this is a big deal. I mean, a lot of stocks that even fall into the smaller part of this list, the back end from 25 to 30, they kind of drop out and other ones drop in. But this top 10 really doesn't change all that much. So they're going to have the biggest influence on the overall market, especially if they're all working in unison. So we're going to need to see improvement in these intermediate term trends before we can expect any kind of really meaningful move to the upside. That's my thought process. Now, it's going to start with the short-term trends. Right now, we don't even have one positive short-term trend in any of the top 30. Now, obviously, some of these are neutral, and it wouldn't take very much to turn them positive. But just looking at it in these terms, and one of the things I wanted to mention is if you're looking at something like this and you have your own process and you do it on a consistent basis, that's great. Because what you want to see are the differences over the course of a month. So for me, it's for a month, once a month, because I want to see these intermediate term changes. That's really the key. I do track the weekly shifts in the ETFs of the major sectors every week. But for the top 30, I just do it once a month. Generally speaking, I'm just trying to focus in on that intermediate term and long-term trend. I'm not as worried about the short-term trends for this type of analysis because I'm trying to get an idea of what the overall market looks like. And if you notice right now, we do have a few trends that are positive on an intermediate term basis. And look at where they're coming from. J&J and UNH, Exxon, Chevron, Lilly. We've got a theme going here. And then Coke, ABBV, and Merck. Okay, those are the intermediate term positive trends out of the top most influential stocks based on market weight. So we have drug stock, and just a big healthcare name. And then you have energy, right? And then one defensive name, Coke. So what I'm seeing, generally speaking, is a lot of the bullish action or positive trends that are coming, especially from here, especially from the intermediate term time frame, are coming from defensive type stocks. So, the healthcare names that are big drug stocks are considered defensive, as well as stocks like General Mills or Kellogg's or Coke and stuff like that are positive as well. And then we do have some energy stocks that are still to the upside on their longer term trends. But from a short term standpoint, they showed some pretty fierce selling here recently, and it has me a little bit concerned. So anyway, I just think this is a good thing to keep track of if you have a consistent list that you go through. And one of the other things I want to mention is this is an unbiased opinion. I do this computerized, and I do this on purpose computerized, right? I mean, I go through for my report, for the report here, I actually go through each one of these and make comments on each one of the stocks. I print out the charts and show them. But in terms of this graphic here, I am doing it computerized because I want to say if a stock has specific price structure based on the way the moving average configuration is, I don't want to have an opinion too contrary to what these are saying. So if I have my underlying bias causing me to think that Apple just can't go down, it just never goes down, and yet all of these are red, then I need to check myself. And this is something that I think you want to do on a regular basis, is make sure you have a way, an unbiased way that says, you know what, this trend is negative based on computerized analysis of trends. The trends are negative, and I can't be sitting here having the belief that it's going to go up. So keep that in mind when you're going through and looking at your individual stocks. Have some process that keeps you on the right side of these trends, basically keeps you honest. All right, let's go ahead and get into the stocks now. Just briefly, my services can be found at rabilstockresearch.com. If you have an interest in trying the individual package, I send out about 2 to 3 reports each week, plus a special video for that package. I cover the indices, the sectors, and also to provide individual stock ideas as well. The individual package, if you have an interest, you can try for 2 months for $50 using a coupon code StockTalk. Let's go ahead and get into the stocks now. So as we move into the stocks now, I do want to spend a minute. I got some requests on energy, so I am going to go through some energy stocks, and I want to start with the XLE. But before I even get into that, I do want to give a quick review on my process here, and I've written up here in the upper left chart trend, momentum, longevity, and overbought, oversold. These are the 4 things you want to look at in every single time frame. when you're doing analysis. And this is the way I go about doing this. So I look at the trend. The trend, I'm looking at whether it's positive, whether it's negative, or whether it's neutral in each time frame. I look at the momentum characteristics, whether it's strong, whether it's weak, like super strong or weak. And then is it confirming each leg, or is there divergence in place? And then longevity is essentially saying how long has the trend been in place? How long has it been? So if you look at a weekly chart, this 18 crossed above the 40 in this area. The MACD crossed above the 0 line here and basically have been above ever since. So this is a pretty long trend. I can go back and do the same thing here on the daily chart. This is where, right here is where the daily turned up, and it stayed positive essentially through that whole period, and then has just recently crossed to the downside. So this is now a negative trend, but it just happened. And then finally, the overbought, oversold. It's relationship to the 18 in each time frame. So you can see we were getting extended on the monthly chart, and we actually got pretty extended on the weekly chart. Now we were extended back here away from this line, and it's not a percentage. I don't think about it in those terms. I visualize, I just see it with my eyeballs, right? I'm just kind of looking at it and saying it's getting a little bit too far away from that line. We'd expect some kind of a pullback. But if you notice, when this was happening here, it never really got that extended on the daily chart except for this one period, and it kind of snapped back pretty quick. Other than that, that whole period, it really didn't get extended on the daily chart. But look at what happened recently. We got extended away on a daily, we were extended away on a weekly, and we've been extended away on the monthly. So you had all three time frames stretched away on a what I consider to be the OBOS, the overbought, oversold indicator for each time frame. Now, other thing I want to mention is I'm looking at three time frames as my major time frames when I'm looking at big picture and really what I'm expecting to take place over the next 3 to 6 months. So the weekly chart is the core of what I'm looking at, and then I look up and I look down. So I've got a monthly chart here and a weekly chart here because this is kind of the key time frame. I've also got two of these, okay? I've got a weekly here that has my main indicators, that MACD and ADX, and up here I've got relative strength, and I've got it isolated by itself. The other thing I really like to do with the weekly chart is put the zigzag on. And I use a factor of 2. By default, it comes out at 2.5. Okay, it's usually at 2.5. I just switch it to 2. I like it to be a little bit more sensitive, but the zigzag can be really helpful, a really helpful tool. And I'm going to show you as we get into some of these other names, these big names, why it's so useful to me. Okay, so I've given you a little bit of analysis on the XLE already, just based on going through these. We can see that the short-term daily trend has turned negative. The monthly trend is up, and it really just turned positive not that long ago. The 18 is above the 40, both lines are rising, and that just happened recently. But we had a huge move to follow. So what I'm expecting is some kind of a correction to take place to work off this overbought condition. Look at what the monthly chart did. So we made this big move, consolidated, and then made another huge move. And the biggest bar in the uptrend. So look at the size of these green bars. You see these green bars? These are big up months. Okay, this was the biggest up month of the move. And that came after a huge prolonged uptrend that had taken place. So when I see that, and it's extended away from the moving average, and it's after a big run, you tend to think it's getting late. Okay, and then we got the big red reversal bar to kind of confirm. So this is, you can call this a bear 180. You could call it a twin tower reversal. I mean, everybody's got different names for it. It's a bull bar, big wide range bull bar, followed by a big wide range bear bar. And that's a huge negative, I think, in the short term. The midpoint of this is a key level to watch and probably going to provide resistance on any kind of a rally. So I'm doing all of this analysis based on the monthly chart. This has taken place in a lot of energy stocks. Now, one other thing I want to mention as I look at the daily chart, look at the volume expansion on the decline. You see the volume expand. We had some gaps in there, but look at the volume too. So I'm looking at all that before even analyzing the MACD or the ADX. There's some pretty standout things taking place. So if I look at this, I've got a bullish trend on the monthly that is overbought and starting to work off the overbought condition. The weekly trend is more neutral. We've broken the 18-week. It's starting to flatten out, but both lines are, the 18 is above the 40 still. And then we have a short-term negative trend based on the daily 18 crossing down below 40, MACD crossing back down, and ADX showing some strength based on the selling. Okay, so I know I spent a lot of time on this, but I wanted to cover the 4 things you want to know on each time frame. I wanted you to understand that you're looking at the weekly first and then going and looking up and then looking down. Now, if you want to look at shorter term trends, this would be a daily chart, this would be the weekly chart, and this would be the hourly chart. Okay. And so that's how I would go about it. Like if you're a swing trader and then this is your main chart here is a daily, and then you look up a weekly and look down at an hourly. All right. XOM. Very, very similar to what I was describing on the XLE. Bullish trend, but got extended. We hit the big round number at 100 and into some price resistance. This should take some time off here and consolidate. We're starting to see that process. I won't pull this up, but the volume is pretty heavy on the way down. In fact, XOM, HES, FANG, VLO all had the same volume pattern. Heavy volume on this leg down. Heaviest volume it's seen really this year. So I think it's important to recognize that, and that the high probability is that these are going to continue to consolidate. Now, I do want to make sure you understand, I don't think this is the end of the bull market for these at this point. I think this is a correction in an ongoing uptrend, but how they correct will tell us a lot about how long this process is going to take. So let's look at Hess. It is a little bit different. This is a huge base. The monthly chart broke out of this big, huge cupping pattern, basing pattern, really around 75 or so, and then got a nice leg up and then took it to all-time highs. The ADX is just getting going on the monthly chart. I think 100 is a big level for this. If this stock can hold 100, then I think this process is a shorter term correction that could lead to higher prices. If it breaks 100, then we're probably looking at a longer process for this. It's something that's going to take several months and not something that's going to get up and going again all that quickly. But I do think it's going to get up and going again. I mean, that's kind of where I am based on what this monthly chart looks like to me. FANG is definitely different. Look at what the monthly did. Instead of getting a big breakout, we actually tried to break out and failed. And look at what we have. Biggest green bar of the move, followed by the biggest red bar. The midpoint here happens to be the high. So this is an incredibly key level. The midpoint of these two bars coinciding with this prior high. I don't think we're going to get through right now. I think we're going to consolidate back towards the 18-month. I think this is going to take some time off, but we'll know. If we get back up through that key level, that'll be a really encouraging sign for this trend. I like to do that analysis on the monthly chart without even looking at the smaller time frames. I think it gives you a really good sense of what's really taking place. We know we got extended. We know we're working off the overbought condition, but really overall, this trend is still bullish on a longer term time frame. Okay, last one, Valero. This one had a big spike, and I might as well just stick with the monthly. Look at the big spike. You got stretched away. We tried to carry through and follow through this month, and then got a big, huge reversal bar. I mean, that's a massive monthly reversal. It almost hit, what was it, around 145, and now it's down in the low 100s. I mean, that is a huge reversal, and we didn't really get the ADX as going as strongly as we saw in something like FANG or Hess or whatever, where the ADX is actually moving on this monthly chart. Pretty good volume reversal as well. But 100 is another level that I think is really important. If we can hold above that, then this is just going to be correction phase that could get up and going before too long. If it doesn't hold that, then you have to expect it to take 3 to 6 months. Okay, let's move on to some other stocks. Thermo, TMO. So the thing is that this is breaking the 18-month line, but it's not doing it in a way. Let's look at the monthly. You see how it's broken it, but it's never closed below. This is the first time, assuming it holds where it is right now, we're going to close the month below the 18-month line. But 500 is the key line. I mean, this is the key right here. As long as we stay above 500, I think this is okay. I'm a little worried because there are a lot of stocks that are right at this 500 level. I'm sorry, at this key level. They're sitting on key support levels, and we're going to go through a few of those coming up. And if they don't hold that, then I think it doesn't bode well for the general market. I decided to do a couple of stocks. There were fewer requests that came in, so I decided to pick off a few of the heavyweight stocks that I haven't discussed in a little while, like Meta and Tesla, and I want to make sure I cover those. So look at NVDA. So this is a disturbing sign because we're getting a little bit disconnected from the 18-month. We had been hanging around the 18-month, and now we're getting pretty far away from that line, and that line's starting to roll over. I mean, that is a huge concern for me. And let me just explain why. So this is what I love about the zigzag. So I've got a zigzag up showing the higher highs and higher lows, and now we've made a lower high and a lower low. But I look at a 1, 2, 3 change in trend process that I discuss in my book, and this is where you have a trend line in place where you use the last low before the last high. So you go and look at the high and go back and figure out where is the last bottom. That's this right here. That's my anchor point for the trend line. And then I go back and I draw a trend line through without passing through prices. So if I drew a trend line from here to that low, I'd be passing through prices, so that won't work. So I have to use this as the trend line. If I break that trend line and then come back and test like this and then come back down through the low here, I've got a 1, 2, 3 change in trend taking place. Well, that's the break of the 18-month, and it happens over and over and over again. And it's telling you that the weekly trend, my main trend, is reversing the trend to the downside, and that's coinciding with the break of the 18-month. So highly concerned about that, and we're coming down to this 150 level. We need to hold 150 in NVIDIA, or we're going to go to the lower end of this support zone, and that puts in a lot more risk in this in the near term. Probably, let's just look at what that level is. It would be down around 120, 125. So we need to hold 150 if that doesn't happen, just like we need to hold 500 in Thermo. Look at Amazon. 100 is the key level for this one. We're testing that level again. We've been bouncing out around it, but look at how key and important that level is. If we don't hold the upper end of this zone, it's probably coming down towards the lower end. So I'm really kind of concerned about this. I don't think this would be a good sign for the general market if we lose these key levels on these big stocks, right? I mean, if we don't hold the upper end of these pools of support, then we're probably going into the lower end, and that's going to put pressure on the entire market. The trend is down. The 18-month has rolled over, but 18 isn't below the 40 on this time frame. It's actually just more of a neutral negative type of a pattern on the monthly. But the weekly trend, the core trend, is clearly making lower highs and lower lows, and the momentum is confirming that at this point. MACD and ADX are making new lows with price, or ADX is making new highs based on the sellers, and so 100 is very important on that stock. Now, Tesla is concerning because the 18, and you can see it on this time frame, the 18-month has now turned down just recently. Just in the last 3 or 4 weeks, we had a rising 18-month, and now that line has turned down. And if we did our 1, 2, 3 change in trend, I can draw our trend line here. We came back and tested. That's 2. 3 is coming back below this low. So that's the 3, the 1, 2, 3 change in trend, and that coincides with the break of the 18-month. Notice also that the relative strength channel has turned down as well. I like to do the same analysis on the relative strength, because if a stock is doing well on a relative basis, and even though the price is going down, it's probably going to snap back a lot quicker than the average stock. But we don't really have that here. It's a little bit concerning the way this is playing out right now on the weekly chart based on the price structure, which is the zigzag, and the break of the 18-month. If this doesn't hold, I think we have to start thinking about this next lower end of the pool of money, which is really closer to 500, maybe even right around 500, 550. So that's kind of the next support level on that stock. If we start to see any more weakness, especially breaking through the 600 level. Meta. So again, we can do the 1, 2, 3. I'm not going to draw on the trend line, but look at the break of the trend line, and then we went up and tested, and we wiggled around, and then when we broke through, that was the 3. And the 18-month is now turned down. So that coincided with the break of the 18-month. These are really critical things to understand. You want to be able to see the price structure by itself, have a clear understanding of that so you know what's taking place. Now we have to do that to the upside. We have to reverse the trend to the upside if we're going to get any kind of real substantial move on this stock. That's it for today. Thanks for joining me. Send your stock requests to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with stockcharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.